Capital One Financial priced $2 billion worth of new senior notes to decent demand Thursday after exiting its earnings blackout period earlier in the week. However, the bank's stock hasn't been faring as well as its peers when compared to the financial select sector SPDR fund. The value of Cap One has fallen around 6% versus XLF after the company released its first quarter earnings results, while other big banks, such as JP Morgan, Citigroup, and Bank of America, remained roughly flat over the same period. In fact, big U.S. bank stocks had generally outperformed the XLF on the back of stronger than expected quarterly earnings. This included B of A, Citi, JP Morgan, and even Wells Fargo despite its legal woes. Although Capital One also topped earnings calls, some strategists noted its revenues fell short of expectations and its net interest margins disappointed. While investors had envisioned stronger results from other big banks, notably the new corporate tax cut law and from the recent lift in interest rates, Capital One's figures somewhat paled in comparison. Capital One stock fell roughly 1.2% Thursday to 91.66, while the XLF gained a little more than 0.1% to 27.68. Meanwhile, as earnings season continued in full force, Capital One took advantage of calm market conditions to sell new notes. The bank priced $1.25 billion worth of 3-year and $750 million worth of 7-year senior notes for general corporate purposes. The tranches tightened by 20 to 25 basis points over the course of their pricing, indicating solid demand for the issuance. Indeed, buyers of investment-grade corporate bonds typically swoop in as new sales from stable issuers cross the tapes, and sentiment about corporate credit is positive. The investment-grade CDX index, a gauge of investors' mood in the high-grade corporate bond market, narrowed by roughly 1.14 basis points on the day to about 60.1 basis points. Capital One's deal also came as prices of U.S. Treasuries rose on the day, with the yield on the 3-year and 7-year notes having fallen by around 0.5% and 1.1% to about 2.62 and 2.94 respectively. The yield on the 10-year note also fell back below the 3% mark to hover at around 2.983. Hear more about what our contributors are saying about the state of the market on the IB Traders Insight YouTube channel. I'm Steven Levine for Interactive Brokers.